Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the October 17th. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should never, ever be prisoners of our past, but instead pioneers of our future. And it is Fantastic Friday, so let's make sure that you and I do everything that we can do to pioneer our way through Friday, this weekend, and the rest of our life. Of course, one of the best ways that we can do that is to always remember, and this is so important, always remember that everything in life happens for us, not to us. Just imagine that as a lifestyle out there. Hey, it is Fantastic Friday, and of course that means I'd love to hear from you. You can do that by reaching out and giving me a call at 877-927-6648. Internationally, you can call me at 727-445-1044. Together, you and I, we can go on a little safari hunt. We can go hunting for bulls and bears. Of course, we've seen what a safari it's been this week. Right now, we've got the Dow futures. They're trading up 171 points. And S&P up 23, almost 24 points, trading at 1874. NASDAQ up, trading out at 50. NASDAQ is up 56 points, trading out at 37.97. Lost my focus there. Russell 2000 up 8 points, trading at 10.91. It is Fantastic Friday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Goldilocks back a couple bucks right now, trading out at 12.38. Silver off 12 pennies, trading at 17.31. Light sweet crude up 46 cents, trading out at 83.15. If we take a quick peek across the globe out here, let's go see what kind of Oktoberfest party they're throwing in Germany right now. The DAX up 159 points, trading out at 87.42. The FTSE up 62 points. That's up 1 full percentage point. The DAX up about 1 9/10%. FTSE's trading out at 62.58. Mixed bag over in Asia last night. The Nikkei traded down 205 points. It closed out at 14,532. No fret out there, really. The Nikkei's been traveling in a huge consolidation pattern out here. It's not even at the bottom of the consolidation pattern. That bottom is right around 14,037. No idea whether it's going to head all the way down there or not, but that is the bottom of the consolidation pattern, a 2,275-point consolidation pattern. Hey, speak of consolidation patterns out there, I guess we ought to go look at the Russell 2000. Let's go take a look at the futures contract out here. You want to talk about a let's not do that because I don't have enough active data. Let's go take a look at the
And if we take a look at the Russell 2000, maybe you're following along with your charts as well. The Russell 2000 has been trading in a consolidation range ever since about November 7, 2013. Now, in the futures contract, the bottom of that is right around the 1061 level. We're trading at 1091 or so as we speak right now. The top of the consolidation box, well, that top of the consolidation box is right around the 1200 area, 1199 or so. What we know about the Russell 2000 is this. Number one, it had been the weakest link out there, right? And it had been the weakest link. And when it broke through the consolidation pattern out here, when it broke through it, and it broke through the consolidation pattern back on October the 10th, came back and tested it on the 13th, rejected it, tested it again on the 14th, rejected it, got back inside, just kind of snuck back inside the party on October the 15th out there. And then yesterday, with wide price spread, accelerated volume, moving to the upside, it said, the heck with you, I'm back in this party, that party being the consolidation pattern out there. So we know about the Russell 2000, which had been the weak link. And the real question for me yesterday was all the activity that we saw going on inside the Russell 2000. Was that really just the hedge funds going ahead and closing out some trades that were working very well? And the answer really came, in my opinion, the answer actually came yesterday. And the answer there was, no, that really wasn't what it was all about. Russell 2000 was saying that we had a false breakout to the downside out here. It is back inside its trading range. If it says that therefore it was a false breakout, I think I'm going to get to post the chart here in a moment. You got to love that. All right, so our man Alakazam in the den here, he'll go ahead and get this chart posted. So if you're watching us on Tiger TV, you can see the consolidation pattern here. This is the continuous contract, in essence, that we are taking a look at for the Russell 2000. Now, if we take a look at the Russell 2000, does it not work? Yeah, it worked. Okay. If we take a look at the Russell 2000 as well out here, thanks, Al, for getting that up. If we take a look at the Russell 2000, we'll look at a trend line out here. That trend line coming from the top of the September 3rd area, actually, and so the Russell 2000's got a ways to go before it says, hey, you know what, I want to go all the way up to the top of the consolidation box. So that trend line that I'm using, just coming off of the September 3rd high, you can then use a touch point, the September 12th high, as well as September 19th out there. Now, if we take a look at just natural retracements from high to low out here, what we can see is what the Russell 2000 has done this morning is it's gotten up to that dead cat bounce at 0.382 retracement level, so 1093.46. So the real question is, do we see this, is this where it starts to let some folks off of the elevator? And do we see just simply a move that is kind of sideways, or does it slice through this 1093 area? Does it slice through it like a hot knife, although you don't really need a hot knife when you use that Kerrygold butter out there. But still, nonetheless, you need a hot knife if you use Land O'Lakes butter, but not Kerrygold butter out there. So if we take a look at this 1093 area, it's going to be very important. If, in fact, it slices through it and moves higher with some additional conviction today, and I don't see any reason why it shouldn't, then the next area is going to be that 1127.34-ish range. That is your 0.618 retracement. And if it can break above that level, then it's going to break that little trend line and says that price should move all the way back to the top of the range, 11.99. As you know, Stevie has been calling for a significant market bottom in the marketplace. I believe we got that signal 2 days ago, and that signal really coming, as you know, the way that I like to use volume, because of the way that it has consistently worked for the last several years, is I like to take a look at the QQQ ETF out there. Nothing like the Q-tips. If we take a look at the Qs, what the Qs do is the Qs make this climactic volume low out there. You know, I don't even know, Al, if you got me. No, I think I'm still on the radio. I'm still on the cell phone, so sorry about that. During the break, actually, let me try to multitask out here. Let me do one more thing, see if I can actually call in so I can get you, so you guys can have some better quality sound out there. So, Al, I'm calling. All right, if we take a look at the QQQ ETF out here, what it does, what it has done out there, just give me the thumbs up, Al, so I know which audio you're picking up on. If we take a look at the QQQ ETF out here, on the trading session here of October 15th, for most people, they would see that high volume bar and say,
market is heading lower. Oh, great. Okay, I'll turn that up. Okay. And I would tell you just the opposite. I would say if you were to go back and take a look at the previous high volume patterns inside of the QQQ, you know, folks say, is this time going to be different? If it's going to be different than the volume patterns in the past, and that was a big one, 108 million shares. In fact, the most recent prior big volume that we saw down here, that took place on October 4th. Now, on October 4th, it took just a little while to form a bottom. That bottom came in with a pretty decent high volume bar on April the 15th, 84 million shares. And, of course, that was a key reversal session. So the combination of those two was a very nice thing out there. So it is very, very – look, the market's still in the process of forming a bottom. Was it Wednesday that it was it? I don't know the answer to that. What I do know is that the market is still in the process of forming a bottom. And as you know, one of those signals out here that we were taking a look at, and that was the summation index, both for the NASDAQ, both for the New York Stock Exchange. If we take a look at the New York Stock Exchange, because you and I, we went on a safari. And inside the NYSE, we went back 10, 15 years. And we looked for this very normal pattern out here with a rising price oscillator, with it all being below that zero line. We looked for every instance we could find where it indicated that it was going to fail and it wasn't going, we weren't going to see some type of a bounce up. You know, hey, back to that Russell 2000. Talk about V-shaped type bottoms in the weakest of the indices out there. Looks like that's what it is forming. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 167, S&P up 22 3/4. So let's go take a look at a couple charts we were looking at yesterday, intraday, and get a feel for what's going on inside the S&P futures. Now, remember, when we took a look at the charts yesterday, we were specifically saying that then looking for A to B equals CD patterns to the upside. When we looked at it, I can't remember if it was a 10-minute chart or a 5-minute chart or a 30-minute chart out here. Let's take a look at the 10-minute chart. I think it was a real intraday chart. It was a 5-minute chart to be more accurate. And what we were taking a look at, oh, come on, participate with me. Come on, do me a favor. There we go. When we were taking on, maybe I just need to squeeze a little bit more here. Let me squeeze some juice out of this chart. Come on, you can work for me. Man. Okay, I know everything happens for me. And when we were taking a look at the S&P futures chart out here, I think it went back to like October the 10th. So I'm going to pull you out. So it was back in October the 10th when we were taking a look at it. And what we had noticed here was that we had seen no A to B equals CD patterns to the upside that had formed, even on an intraday chart out here. And so the suggestion that we were looking for, in order to be able to identify a bottom, we would see a change in that pattern, because those lightning bolt patterns they're beautiful patterns out there. They really do help you to understand at an early stage when a change in trend could be taking place out here. And that's exactly what happened when we were on the air live. What we did was we were taking a look at the first leg up. We had already seen one A to B equals CD to the upside, and we were taking a look at the second one. The first one took place right down here, and this was at about 7 o'clock in the morning, and this was yesterday morning. And that first A to B equals CD, it looked like that. We used that low. I think that was right around the 1813 level. The B point came in at about 8:10 or so in the morning yesterday, and so we saw our first A to B equals CD to the upside that had formed. We then started taking a look at for our second one, and our second one went like this. Our second one looked at the swing point low at 840, 850 yesterday morning, and the B point that we had up here, because it had not formed. But come on. Give me a favor out here. So that was our A point. Our B point was, I think it was right up here at about 950. I'm pretty sure it was. We were looking for a retracement, and we identified the 0.618 retracement. And the market had moved down to that level pretty quickly. And then what did it do? It held, and it went ahead and formed a 0.6. It formed a 1-to-1 A to B equals CD to the upside. It completed that 1-to-1 move right out here at 1050 yesterday. So now what we are seeing here is a series of A to B equals CD patterns to the upside. So if we swing forward to a little bit larger time frame chart, let's go do that. And if we take a look at the 120-minute time frame, one of the things that we'll notice here also, so on a little bit larger time frame, what I'll point out to you is we haven't seen the market close above a market profile resistance level. The last time we saw that was back here on October the 8th. What's today, October the 17th. So quite a few trading sessions ago. And that is the exact opposite of what we've got going on right now. So we've seen a couple different changes in trend take place just when you take a look at the shorter-term charts out here. Now, the A to B equals CD pattern to the upside that's in place here for the ES Mini on the 120-minute time frame, it says that we ought to see price get up to about the 1902 level. That's your 1-to-1 A to B equals CD, so 1902. Remember, we use these as guidelines, as your captain of the ship, Barbosa, right? The guy from Pirates of the Caribbean out there. So 1902, that is our guide. That is our 1-to-1 A to B equals CD to the upside. Now let's go take a look at a daily chart. Remember, 1902 is the number out here. If we just simply take a look at retracements now, we're going to come from the high out here. So we're using multiple tools. We're going to come from the retracement of September 19th down to the low of Wednesday. And what we're going to see is that at the 1889 level, which is your dead cat bounce, so 1889 to 1902, that's really what our expectation ought to be with regard to where and you're trading at 1876 as we speak right now. So that is really, and this candle formation out here over the last 3 days, this is a three-river morning star pattern. Now, where we're going to really find out whether there's a change in trend and whether the bottom was put in, or is there going to be another retracement and a move lower out here, I would have to say is when the ES Mini gets up to the top of its descending price channel out there. And that's going to be in the 0.618 retracement level from that high all the way down to the low out there. And so the number 1937 is another number that you're going to want to write down on your pad of paper and be watching for. Now, at that 1937 level, that's really where the bears have the next best opportunity to go ahead and take a short position out there. Right now, if you're bearish, watching how the market came off of those lows from Wednesday and yesterday morning as well, knowing that we've got A to B equals CD patterns to the upside, you've got to be asking yourself, why aren't you taking your profits now? Because this ES Mini is going to be moving higher. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the race. Down 6 minutes, up 18, composite up 50 points, Russell 2000 up 13, DAX up 156, FTSE up 69, gold back $2, silver down 7 cents as we speak right now, leading the charge. And I do mean leading the charge the upside. What is Regenerative Pharmaceuticals down out here? They're up 9%, up $31. Let me see what this says here. On Friday, said it's EYLS LEA injection. Come on, open up for me here. Significant gains in visual acuity. Then both of a couple names here that I can't remember out here. Anyways, they've got some nice news out here. Let's go take a look at Regeneron Pharmaceuticals. It's now taking on a swing point with volume. The swing point had volume as well. 1.5 million shares up there on the trading session of September the 2nd. You're up today already with 358,000 shares. That says you take out that high, you've got a very large A to B equals CD to the upside inside of Regeneron Pharmaceuticals. Your A point's going to be down here on June the 27th. Come on, work for me. There you go. The B point is going to be out here on September the 2nd. No, now it's totally messed up here. Come on, Steve-O. Let's get, there we go. All right, so let's come back here. A point, June 27th. The B point's going to be the swing that it's dealing with here right now, September the 2nd. Looks like it's going to be able to take that out with volume. Your C point was a retracement down into this Wednesday, October the 15th, down at only about a 50% retracement down around 320.06. And Regeneron Pharmaceuticals looks like it's headed to 419 to 447. Let me put this on a weekly basis. Is not showing up as a 52-week high here just yet on my system. So let me pull this back on a weekly chart out here. Excuse me. Let's take a look at Regeneron. Yeah. In fact, even on a weekly basis, let's see. The week ended September 1st was 3.6. Oh, you're taking out on a weekly basis. So you've got a confirmed A to B equals C to the upside as we speak right now on a weekly chart. That is awfully darn strong. That is Regeneron Pharmaceuticals. That is absolutely off to the races out there. So more than just 35 points left in its move to the upside. Schlumberger, I was looking at Schlumberger this morning here. In fact, I was looking at the entire energy sector, the XLE. I think that has been overdone to the downside out here. One of the things that had caught my attention, let me see if I can pull this up in a moment here. I had to reset some of my system out here, so that was a real pain in the butt. But if we take a look at the Schlumberger, this is the weekly chart that we've got up on our screen here. Now, Schlumberger, from a weekly standpoint, has a high-volume bar the weekend of June 23rd, and that's at least where it should be headed to, the low of which is 106.78. The high is 117. Now, the energy sector, has been toasted, fried, double fried. If you ever had, what do you double fry? I'm not a big fry person out there. The only real fried food I like is some good shrimp tempura, good onion rings. I do like onion rings out there. In any event, if we take a look at Schlumberger, I want to go back to the daily chart out here and take a look at it, and then see if the other charts here pull up. As we take a look at Schlumberger right now, what it did, it's completed a 1 to 2 A to B equals CD to the downside. So that's first thing that had piqued my curiosity out here, is that, typically you'll do a 1 to 2 A to B equals CD. Al in the control box said fried ice cream. I have not tried fried ice cream out there. Not that I'm against it, but I certainly have not tried it. And so it did strike me that, okay, and Schlumberger is one of the stronger equities inside of the energy sector out here. If you take a look at this nice wide price spread accelerated volume day back here on June the 25th out there, that's where it should at least head to. The bottom of that bar, again, the price here, 106.85. You're at $97.20 or so right now. So is that 1 to 2 A to B equals CD to the downside that it completed? And when we take a look at the energy sector, let me see if I put this little chart here up on our screen. Yeah, what I noticed about the energy sector as well, and which is why I'm taking a look at it and saying, if we just put in a significant bottom in the market, could it get more ideal than this with regard to the energy sector totally getting trashed? If you go from its high back here on August the 26th and you start doing your wave count on the way down, what you'll see was on October 15th, so on Wednesday, it wasn't until yesterday when it went ahead and confirmed its seventh wave to the downside. Now, at this stage here, it had quite a wide price spread yesterday, so if you were going to trade the energy sector, in essence, in reality, your stop needs to be below Wednesday's low out there. So I then started taking a look at a couple of stocks, ExxonMobil, Schlumberger as an example out here. So you got Schlumberger, one of the stocks leading its charge to the upside. Let's take a look at ExxonMobil. Of course, it's just ExxonMobil, Schlumberger, Chevron, maybe one other or so that you really need to focus in on. And in the case of ExxonMobil, let's see what this thing has traded back into. ExxonMobil trying to get, I believe this has been consolidating as well. Large consolidation, although let's go ahead and make sure out here. Yeah, the consolidation never made it all the way down to the bottom of the consolidation box out here. But if you take a look at ExxonMobil and you take a look at this this lower threshold line out here, you're going to be somewhere in the, pull down maybe just a tad more. Maybe it won't let me pull it down a tad more. You're somewhere in the, here, I know another way to do it. Heck with it. I'm going to delete it. I'm going to redraw it. And I can just simply move it back. There we go. Okay. So somewhere right around the $85 level is the bottom of the consolidation out here. The top isn't as well defined, really, because you're pretty much looking right around the 101-ish type range out here. ExxonMobil, most certainly came down with volume, even as it was coming back into this consolidation box out here that it's trading in. You had this... there was nothing that I could identify as a reason here why it was necessarily stopping. I guess it came back to ice right here if you go all the way back into the February 2011 time frame. So that could be a line of support as well that you would draw out here. And we saw price move back really right into that level. So you've got an area of support that you can say in the case of ExxonMobil that was really between the 88.23 to 85.10, and so that level was tested this week. In fact, if you go back to that swing point high out here, that's got 122 million shares, and this week you've done 89. So you've tested that area. You've come back into a level of potential support for ExxonMobil with some light volume out there. No reversal candle here yet this week, although it could actually form a hammer candle if it has some energy in it. Talk about the energy sector during the day today. So I'll just have to come back and take a look at that. In fact, why don't I just go take a look at one other one? I did not do this here this morning. It was Schlumberger that I was most focused on. And I saw that was going to gap up. If we take a look at Chevron CVX out here, let's go see what that is doing. And here is the weekly chart as well. The weekly chart really looks a lot like ExxonMobil's. Of course, this could more easily form a hammer candle than ExxonMobil could. And in the case of Chevron, it came back into the swing point here from February 3rd with quite a bit of volume. It hasn't been able to break through it. Now, that was a hammer candle. So the hammer low from February 3rd, that had volume of 46 million. You're at 47 right now. You've tested it with volume, but that hammer candle, important hammer candle, has held inside Chevron. So, if this is a pretty significant bottom, I'd have to say playing around in the energy sector might be someplace that you'd want to take a look at. Let's take a look at Biogen. It's up $4.50. Let's just go see what this equity here is doing. It's tested this week here. It's tested its market profile low. It's trading right about in that area. 308, I believe, is the number. 308.71. You're at 306.99. But what's it doing on a daily basis out here? Let me switch back to our daily charts. I'll take a look at a couple of things as well that are dropping. Then I'd like to, in fact, we want to take a look at Google. We'll go over and take a look at Google, see what it is doing out here. So in the case of Regeneron Pharmaceuticals, what can we say about it? It came back to its breakout area. I mean, that's really what it did. Its breakout area that took place here, wide price spread, accelerated volume to the upside July 23rd. The real breakout area was the trading session from July 17th. It came back there, tested it, rejected that level, that low being 298.31. Couldn't bust it out. Now it'll probably try to do what it can to go back up to the top out here and see if it can bust out those highs in the 348-ish type range. That is BIIB. Google, we want to take a look at Google. Google has, it's trading down $7 right now. So it gapped down. We want to see, did it gap down? No, it didn't really gap down that much out here. Here's the daily chart. The interesting thing about Google is this. It came out with earnings last night. And if you were to go back and you took a look at every single earnings date for Google here, what you will notice is that typically the way that it responds to earnings, it continues with that trend for a period of time, sometimes until its next earnings report, sometimes for a period of a week or two. But if you were looking for a trade and a behavior pattern, so therefore it's going to be very important to watch how Google trades today. It's only down a few bucks. You can easily make that back. But if it continues to trade lower today, and you see it trade lower on Monday, Google then is giving you a little signal here that it's at least going to go try to bust out the low. It's going to go try to bust out its hammer candle from April the 28th, and that's at a 511 price point. And if it breaks through that 511 price point, then you've got an A to B equals CD to the downside, especially if it can break that level with volume. But we'll take things one step at a time here with Google. Likewise, if it makes a turnaround today, if it's turnaround Friday for Google, that would bode well for its for what it should do over the course of the next week or so. It's got one of the more predictable pattern behaviors based on the way that it trades right after earnings out there. You should go. You can easily go find those dates. You should go back and track that and see if that works. See if you can identify a trade setup that might work for you. Let's take a look at. Let's see what else do we have moving to the downside here. You got Athena Healthcare. ATHN is a ticker symbol. Looks like they were out with numbers. Third quarter revenues of 191 million versus 151. So they certainly beat the top line. Looks like they had a third quarter loss of 1.6 million versus 1.17. So expenses may be a little bit out of control here. Nonetheless, let's take a look at Athena Healthcare. Gapping down and testing its hammer candle that was formed. It was a high volume low as well. This is back here on May the 7th. 3.4 million shares down there. The top of that hammer candle, 97.30. I don't know if we actually hit it yet today. No, the low 108.43 out there. Gapping down. It suggests that probably the low of that hammer gets tested. That is a price level of 97.30, and that is on Athena Healthcare. ATHN is the ticker symbol. Let me see. What else do we got big to the downside here? You've got this ticker symbol here, RPRX, Repros Therapeutics, gapping down. Let's go see what this is doing. I don't see any news behind it, so let's go take a look at this. This is taking out a swing point. The swing point here most recently was on September 22nd, 1.7 million shares. You've done 2 million shares today, so it's had no problem taking that out. This thing looks like maybe is nobody in a profit position? I hope that's not the case. Let's take a look at the weekly chart and go back further. No, that is not the case. There are some people, although very few, in a profit position. Looks like this is coming all the way back to an original breakout level, which takes you back to May 7, 2012, somewhere around $4.12 to $7.80. Well, it's already trading inside the $7.80. So, yeah, $4.12 looks like the target for RPRX is the ticker symbol, and that is Repros. Ripros, they sound like Scooby-Doo's dog, Shaggy or something. Ripros. In any event, that's probably not a very good Scooby-Doo dog imitation out there. Let's take a look at currency pairs. What do we have going on in the currency market out here? The Euro Japanese yen, let's go take a look at it out here. It's a weekly chart. Let's take a look at the daily chart out here. This looks to be off of the bottom, very close to a hammer candle forming here yesterday. Of course, we know this currency pair tracks the U.S. stock market better than any other currency pair out there. And if this is back off to the races, is going to do a retracement at a minimum, that should put some additional energy inside of the market. As far as retracements go, you can see it has just hit the 0.382 retracement here earlier this morning, right around the 136.84 area. So not unusual for it to maybe move sideways and then go ahead and take on the 138.51 level. If we go take a look at the euro against the U.S. dollar out here. We can see that this is pulled back just slightly, but the euro is off of the bottom. It has made the 1-to-1 A to B equals CD. We've just seen this thing here slide sideways over the past two trading sessions. I know it's hard to believe, but the euro is off of the bottom. The euro is going to continue to move higher. That's going to put continued weakness inside of the U.S. dollar index. If I take a look at a trend line out here, let me see if I can do this. And now this trend line here is going to take us from the high on May 8th down to the right about there. There's our no, I don't want to lose it. There's our trend line all dressed in white. Let me get rid of the A to B equals CD pattern out here. And that is where the euro is headed to. It's going to head back to the top of that trend. So that should put continued weakness inside of the U.S. dollar index, and we'll see what happens as price moves up into that trend line. If it breaks through that trend, that would be very bullish for the euro, very bearish for the U.S. dollar index. That would also, in turn, be very bullish for gold, and so we'll see how that plays out. If we take a look at the Japanese yen, the yen here this morning getting a little bit weaker against the U.S. dollar. If we take a look at it, this thing here has made a retracement. Let's see what the retracement has been thus far. After making that 1 to 2 A to B equals CD to the upside, it has further to go to the downside. I think that the Japanese yen is just setting up a B to a C of an A to B equals CD to the downside. This is Steve Rhodes. This is TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. markets. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow up 175, S&P up 20, composite up 45 points out there. And let's go take a look at the NASDAQ. I see our man Saratoga Bob posting comments into the Tiger's Den here. Looks like he's still trading the NQ out here. Let's go take a look at it. I apologize, you haven't had a chance to read the comments. But let's take a look at what's going on inside the NQ on a couple of different time frames out here. First, let's look at the 30-minute chart out here, as I know he trades the 30-minute chart. So just to add some assistance out here. Now, as we take a look at the 30-minute chart, what we saw price do during this 30-minute session here between 9:30 and 10, what we saw price do at the open was push right down into the unfair low out here. I mean, right down into it. 37.81 is the number. What we actually saw was price get down to 37.80.75. That is a support level out there. And, in fact, because of the point of control, because of that blue line being so close to the unfair low out there, that should be very, very strong support. Now, what we're seeing price do here is try to move over resistance level in the 37. Let's see on the box here. That's 37.9863 is the number out there. So this is what it's done is it backed off right into a level where it should have found support. It did find support. Now it's taking out resistance, and that's what it's doing on the 30-minute chart to the upside out here. Now, that's on the 30-minute time frame. Let's go take a look at the 120-minute time frame out here. We took a look at the ES Mini earlier, and we take a look at the NQ. One of the things that we can notice is that really since the highs of, not since October the 8th, we're at October the 17th right now, we have not seen on a 120-minute time frame, we have not seen price get up and over the resistance of its market profile. Well, that took place here yesterday. This took place at 12 noon yesterday as price got up and over it. Price then, for a period of a number of hours, just simply with small-bodied candles, came back and did what? Just hung out between the what was really good resistance. See here on the 120-minute chart, we've got the point of control, that light blue line so close to the red line out there. That says that the bears should have control. Well, the bears got stompled over. That took place at about 2 o'clock, between 2 and 4 this morning out here, as price just simply forged forward. So inside the 120-minute time frame chart for the NQ, what this suggests here is an A to B equals CD to the upside. That A point down at the lows from yesterday, the B point that came in at about 2 o'clock, between 12 and 2, and the C point was a retracement down into about the 4 p.m. time frame. 1-to-1 A to B equals CD to the upside. That says that we should see the NQ, which is trading at 38.02 right now, get up to 38.32, maybe even 38.60. But 38.32 is very likely the day's target out there. And so Saratoga Bob, I hope that assists you by understanding those market profiles and what price is doing out there. Real quickly here, with a minute to go, let's recap. Let's go take a look at the summation index. Let's go see if we are in bullish territory inside the New York Stock Exchange. And the answer is yes. We are back above the zero line. You can see a little green speck if you're looking at us on TigerTV in the second panel off the bottom. That says New York Stock Exchange is now back into bullish formation. The day is not over. You need 309 net advance in issues, I believe, is a number in order for the bulls to take control. The bears have had control since September the 5th? No. Yeah, September the 8th. They have had control since September the 8th. This is the first time we've seen the price oscillator get back above zero, stays above zero. It's another confirmation that a significant bottom should be in place out there inside of the market. If you take a look at the NASDAQ composite as well, we looked at this yesterday. This head is also above its zero line out here, so the NASDAQ composite looks very bullish to me. You know what that means, folks? That means buy retracements. Hey, it is Fantastic Friday. Thanks so much for joining us all week. Hope you had a great week. Have a great weekend. Look forward to seeing you bright and early.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.